Alright fellas, I'm back with another video. This will be about the few trades that I took today after CPI. And first of all, I want to show you guys the picture that I want you guys to study. This is on my Twitter. If you guys don't follow me on there, you should. But you can pause and watch this. This is some standard deviation theory along with just how the market actually books. If you see this low right here, we actually had SMT between NQ, ES, and YM. So I want you guys to go backtest that and study that cracking correlation there. That's what made me understand that we are now going to be flipping from a buy or a sell to a buy program after we put in this low risk buy right here. You can see this order block or this order block acted as support before heading higher. Standard deviation theory, you have our 1.5. This is where the accumulation normally likes to occur. The same kind of price action occurred on the last year's leg as well, from the December move up, or the October move up, I should say. You guys should go in. It's on the 4-hour chart. It looks almost the exact same price leg as this. But this April high is important because if you follow this guy named Zusi on Twitter, he has a high and low theory called previous XL and previous X high, and all the X is a variable that you can change. It's all fractal, but this is a monthly high. You can see this is the high of April, and that's what I was targeting as soon as I understood that the low risk buy was already put in. So that's just how the market moves. It moves from one monthly high to the one monthly low and vice versa. But now I will go over the trades that I took today and why I took them. So we had CPI at 8:30. I was not up. I don't trade CPI, but we did have SMT here between NQ and ES. NQ dropped down into this fair value gap. ES didn't. YM dropped into this fair value gap, while ES didn't as well. So we had some SMT there before the news. Big news candle up. And now I was already bullish because I just explained to you guys why. That higher time frame analysis on the 4-hour, I was expecting that April high to be the draw, and if not, you can obviously frame a trade from anywhere inside of here. And I actually didn't even take profit at the 8:30 high. But so we had the first trade that I took was break even, and I'll show you guys the executions. So I actually got break even twice. So I went long here, and I was targeting this high up here just because if ES was going to take out high a day, which looked like this at the time, I figured if ES was going to take out high a day, I wanted NQ was most likely not going to get up here first. It was going to get up here. So the RR was already good enough for me to take profit at a safer level. And since I only trade with one contract, I was completely fine with that. But regardless, I did get stopped out. If you're wondering what I entered on, I entered off of the SMT that we had here, and I was using this breaker as my entry point, as well as this change in the state of delivery on the 1 minute. And you can see the wicks are respecting that, but once ES took out high a day, NQ made equal highs, failed to take that out, and that's why I moved my stop to break even. Could have taken profit, I guess, but I was more bullish on the day than bearish. But there were some signs that, could have showed me that I should have either just closed in full or trailed my stop. Always something to work on. This loss that I took was premature. I got too antsy and I longed too early. So after this got souped, I went to the 15 second, and there's a 15 second fair value gap under here. I should have anticipated that this low was going to get taken just because we closed below these last two up close candles. So that's a change in the state of delivery there, most likely seeking liquidity. And since ES was now following after taking out high a day, that was my cue to wait for these lows to get taken and then have a reversal back up higher. So I got stopped out immediately, pretty much entered too late. I was entering off of the 15 second fair value gap. And so once that happened, I was like, okay, this got swept. ES now, this was at 938. and here's 938. So ES still had high day to take out, and that's why I was like, okay, now we're most likely going to come up and take out this high because we created equal highs. And so once again, SMT at the lows looked for a 15-second, 30-second change in the state of delivery. I got that. Really nice entry. You can see 04 pretty much had no drawdown. Stop was at the low. Really good risk to reward. The risk to reward looked like this. So I got filled at 04 like that. Stop was at this low because if this trade's going to play out, this low should not get broken since it's the SMT low. And you can see that the trade went for a little over 20 handles, but I was targeting this high. You can see over a 2-hour trade. And once again, more SMT. So here's 941 and here's 941. So once again, arguably, I could have taken profit immediately after ES took out high a day, which most likely probably should have been the right option just because we did close below this 1 minute down close candle here. But in hindsight, I'm fine with taking a break-even trade just because I was heavily bullish on this day and I wanted to hold for that expansion. But we never really got our manipulation leg, right? This is all just accumulation in here, so that's also something that I should have thought about. So all this is just a retracement, right? You can see this retracement leg down after the 8:30 news, and all of this inside of here is all just accumulation. And then now we get our manipulation here, and you can see this is what happens. We get our distribution, right? So this is that ICT power of 3, and yeah, that was that trade. So got stopped out or got break even, got stopped out, got break even, and then I saw this and I was like, okay, this low is way too clean. ES is now following suit. ES also had the same low that I was anticipating. As soon as ES broke this low at 926, you can see here is 949 and here is 949. Yeah, so we got this displacement candle down. As soon as we broke that low on ES right here, I did move my stop to break even. I wanted to see speed through these lows right here, and that's exactly what we got. So you can see that displacement through this area. I sold my one contract here. You can see I got filled up here. If you're wondering what this entry was, it was a 30-second fair value gap. Got filled, and yeah, that was it. That was my quick take profit. That was around, let's see how many points that was. I got filled up here. TP at this low. It's like 27.5 points. And my stop loss, if you guys are wondering, was this high right here. Because this was a fair value gap high, and I wanted to see this stay as a breakaway gap. This is a 30-second fair value gap inside of here. So once again, really good risk to reward. 3 RR there. So the next trade that I took, which normally I'm one and done, especially after being so many break evens, but this trade was just so good and I really just wanted to take it, and I'm really glad I did. If you're wondering why the executions aren't here for this, it's because I took it on the micro just because I wanted to size down after I had a winning trade, but I did use full size on Top Step X. I have 2 other funded accounts on there, so I'm not lying. You guys can see here's the execution. Bought 5, sold 5. So here's the reasoning behind this trade. So we got our manipulation leg, and I honestly should have got in sooner because all I needed to do, you could have gotten in down here. This is the low risk buy that ICT classifies. You want to be getting in for the best risk to reward where the wicks are, right? This is how you get those really nice risk to reward trades. And you can see this wick is acting as a gap, and in this lower gap, or in this lower wick, there's most likely like a 30 or 15-second fair value gap or volume imbalance or something. But regardless, this is what ICT deems as the low risk buy. We get the sweep of liquidity, and we have SMT between ES, NQ, and the Dow Jones or YM. So this is, you can see I had the SMT marked off. So here's the 923 low. Here's one of the same swing lows at 10:02, and here is 951 and 10:02. So as soon as we broke back up and we had this close over here, I was very confident and this was going to work. This inversion was acting as support, or you could just look at the BPR, either one, the fair value gap or the BPR, either one works. But I also had more confluence because I used my standard deviations, which was lining up with liquidity, which is exactly what I look for. We had those same equal highs on NQ that we were targeting earlier this morning, and I was looking inside of this 1 minute fair value gap with this order block, and this is a breaker here as well. So a lot of confluence. Mark this out. Actually, does it even tap it? It actually never even taps it, I don't think. Oh, it does, to the penny. So that's, you can see that's algorithmic. But inside of here, on these, underneath these lows, this is a turtle soup. Every fair value gap entry on a lower time frame is a turtle soup. This was a 15-second fair value gap as well, and I could see the lows a lot cleaner, so I was anticipating those to get souped. I got filled. You can see right here. I got filled at 04 and a quarter. Inside of my silver bullet zone, what do I expect in the silver bullet zone, which is the -1 and the -1.5? That's where I expect reaccumulation to occur. And now, since we're in a bullish order flow and the higher time frame is aligned, or the lower time frame is aligned with the higher time frame, we have our 2.5 lining up with our equal highs up here. That's where I was looking for price to draw at. You can see I didn't even hold for this high, but just because I already took a second trade. I should have scaled, honestly, but you can see I got filled right here at this internal high. Plenty of points still. I got filled at 04 and a quarter. Stop loss was at this low. I wanted to see that low get protected, and so I got filled right here at this high. So you can see 1.35 R, 20 and a quarter points on this. And I took the same trade on my Top Step X as well. Same exact fill, but I took 10 micro contracts on that one, so a mini size, and I sold 8 here and then 2 up here, and that was my trading day. But I hope you guys are kind of understanding the logic that I put behind these trades. A lot of the times, my losses only come from when I either don't have an idea where liquidity or where the market's drawing to, which I don't have a strong draw on liquidity, and that's my fault. One thing that I want to bring up that I learned from Dan Dow Trading, um, he had a tweet the other day that said, if you are unable to have a thesis or a trade idea on the chart that makes sense for only a bear or a bullish bias, then you shouldn't be trading. If you can formulate a setup that makes sense for a bullish and bearish setup at the same time, then you have no reason to actively push the button, right? And so if you can eliminate that, and that's something that I'm working on, you'll be a lot farther along in your trading journey. But I hope you guys realize the reasoning behind these trades, why I'm actually taking them, the entries, the exits, everything should make sense. Time has to align with price. That's the most important thing as well. I hope you guys enjoyed this video, and I'll see you in the next one.